Good morning and a happy Thursday. Welcome to today's episode of Morning Wealth. Three things that we will talk about. The pandemic is over for the S&P 500, inflation data and US 10-year auction, and a quick earnings roundup. The pandemic is over, at least for the US equities. The S&P 500 peaked above its highest ever closing level and finished just a few points shy of the mark. It took just 175 days for the index to go from peak to trough to peak, faster than any past comparable rebound. Since hitting the bottom in March, the benchmark has risen about 50%, with more than 40 of its members doubling. Still, only about a third of the constituents are in the green since mid-February. The benchmark US stock index has risen in all but one trading session this month, buoyed by the prospect of declining coronavirus cases at the same time when the federal government and central banks are still supporting the economy. The S&P 500 opened modestly higher on Wednesday, flirted with record levels for much of the day, finally eclipsing February's closing high in the final hour of the session. But the index could not hold on to it, ending just shy of the record and setting its second highest close in history. The S&P 500 ended the day up 1.4%. It is now up 3.3% in August and 4.6% for the year. The Dow was also higher by 1% and the tech-heavy Nasdaq was up 2.1%, snapping a three-session losing streak. Shares of semiconductor companies and beaten-down energy stocks led the way. The AMD was up about 7.5%, Conoco was up 4.9%, Apple was also up 3.3%, closing in on the 2 trillion market value. The tech sector was the best performing in the S&P 500, jumping 2.3%. Microsoft was up 2.9%. Tesla, which is not in the index, it rose 13% as the electric car maker had earlier said that they're going to do a 5-for-1 stock split. While technology firms have been this year's star performers, the market has been supported off late by stocks that are most sensitive to the economy that have been hit particularly hard during this pandemic. The S&P 500's financial sector has climbed about 5% this month, and energy sector has also risen to 6.6%. So there is a rotation that we are seeing in the past couple of sessions at least. US inflation accelerated more than expected last month, fueled by used cars and apparel. The headline CPI rose to 1% from 0.6, while consensus was for 0.7. The core print also topped forecast, coming in at 1.6% compared to the 1.2% in June. Consensus was for a slowdown to 1.1%. So good data in terms of jobs and inflation. Generally, the data that's been coming out from the US has been pretty supportive, and which is actually adding on to the overall positive sentiment in the market. Dollar weakened and treasury yields dropped from the highs of the day, though they were up for the day after government sale of a 38 billion 10-year note auction attracted stronger than forecast demand. So the yield on the 10-year treasury gained for the fourth day, ticking up to 0.67 from 0.65. Remember, a week earlier, we were at the all-time lows at 0.5, just above 0.5%. The rally in the stock market has coincided with the rise in the government yields, a further sign that investors are growing more optimistic about the economic outlook. Gold and silver also rebounded. Asian equity futures are pointing up. On the earnings side, Cisco sank in late trading after saying sales will fall at least 9% on year in the fiscal first quarter, versus analysts' call for a 7% decline. Projections for adjusted profit also trailed consensus. Lyft's revenue and losses beat expectations, and it maintained its forecast for a quarterly adjusted profit by the end of 2021, even with at least 20% fewer rides than previously anticipated. Airbnb's second quarter revenue fell to 335 million, down at least 67% on year, but with some signs of recovery at the end, is what some analysts remarked. It's still eyeing an IPO by the end of the year. Tencent was the big result that we were looking forward to yesterday. Tencent on Wednesday reported results for 3 months to the end of June that beat analyst expectations in one of the fastest revenue growing quarters in 2 years. Gaming boosted the overall revenue while Tencent saw some weakness in advertising business. Online game revenue, one of Tencent's most important businesses, grew 40% year on year to 38.29 billion yuan. That was a faster growth than seen in the first quarter of 2020. Analysts at China Merchants Securities expect Tencent to pull in about 41.6 billion yuan in online gaming revenue going forward. Earnings that we will be looking forward to would be China Mobile, NetEase and Baidu. That's the update. Stay safe and healthy everyone, and speak soon.